Hello? Testing, testing. Can you guys hear me?
Hi.
Hey, can everybody hear me?
Yep.
All right, cool. Hopefully I don't sound too sick on this call, but I'm glad everybody is here. Started a little late. I try to give some people some time to join the call, but I know some people might not be able to make it. I'm recording it, so therefore they can have the link pretty much to go over everything that we discussed tonight. It's probably a pretty quick meeting. It's just going to be like addressing the two paths of what you guys want to take as far as trading, if you want to go the personal route or if you want to go the funded route, the pros and cons of both, the price of both, and pretty much what to expect going forward, for this month coming up. Leslie, how are you doing? If you can't talk, it's cool too. I don't know if you're at work or anything, but it's cool too. But basically, I'm also going to be showing the trading view charts. For the people who are familiar with this, you pretty much can just bypass it. But we're gonna, in the future, be making ourselves familiar with how to read the charts. And also we're gonna go through Osprey, pretty much the broker that we'll be using. There's other brokers that you can use, but I recommend using Osprey. Only reason I recommend that is because the indices, like what we'll be trading, the NASDAQ 100, NAS 100, they're a little bit weighted heavier than other brokers when using them. And pretty much, like I said, I completed the funded account with them, and I really haven't had any problems out of them. Besides maybe the email, get it back to the people. They take a little bit, but no more than 2 days. But yeah, everything pretty much, if I call out a signal, it'll basically be dictated more so to Osprey, just due to the fact of that's who I'm trading with. That's just the issue with that. But you can trade with other brokers, but like I said, I'm recommending Osprey just because I use them. And yeah, that'll pretty much be it. And just, review, I guess the actual goals pretty much that we can look for, for a percentage gain on the account, if we're looking at the funded per month. And then, like I said, just discuss what the personal account can do, because I've been working on that too on the personal side. But going forward, hello everyone. My name is Stafford Dawson. For you who don't know me, been trading Forex for a little over a year and a half now. I started back in basically beginning of, it was 2020, October. So from there, I learned about Forex from a friend who basically had a friend who was trading it, and I got introduced into trading back in 2014, trading crypto. So I didn't start trading crypto till 2015, but one of my friends, basically his father, worked on Wall Street. White guy, was a roommate with in college. He told me basically anybody can, start trading stocks. You don't need a degree or anything like that. But he himself went to Cornell University, got a degree in finance, and then after that, ended up becoming a broker. Me, once I heard that, I started doing self-research. I started watching YouTube videos. I started, reading just different books, just looking how the market looked per day. on the charts. And this was something like what I got right now showing up on the screen. Can you guys see my trading view?
Yeah, I can see it.
Okay, cool. So yeah, like looking on the screen, let me maximize this real quick. One of these. So this right here pretty much is a chart. This is a chart for, well, this is for NAS 100, what we'll pretty much be trading, this in gold and GBP USD. But with this, what these represents is a candlestick. So a candlestick is basically just showing how price went up and down. If you see to the right of this cursor, it has like, in this area is 12,600. This is 12,440. Basically, it's just different prices. If you see one of these candles, like I said, these little figures, if they're green, pretty much that means price went up. If you see red, pretty much that means price went down. How we measure a candle, a green candle, what we're looking at, and again, for some of you who completely new, you might need to rewatch this twice, what I'm about to explain right now. For the green candles, the bottom wick, from wherever you see this start at, is pretty much where price ended up opening at. And what that means is price started in this area, and then it pushed up to this area, all the way to this top portion. I can zoom in, let me zoom in just a bit more. It pushed all the way, so it started in this area. So this is where it started at. It went down in this area. That's what you see, the bottom of this little line right there. It went down in this area, and then it came all the way back up in this area. And then it finally ended in this area. So this was the open for price. Started out at 12,503. It pushed all the way up to 12,515. And finally, by the time this candle was over with, right, it closed at 12,513. So how you measure the green candles is you start out at the bottom. This is the open, wherever you see this is at. So this one opened here. It pushed all the way up to here, but it closed in this area. So this is a close. And it went all the way down here. So it started here, opened down here. Let's say maybe it went up. Finally, it came down and closed. When it comes to red candles, basically where price decreases at, it's the complete opposite. So instead of opening down here, they open up here. So they open at the top. So this opened at the top, it pushed up for a bit. I don't know if you can see like that small little line up there. It pushed up right here, and then finally it went all the way down here, as you see right here. And then finally it pushed back to this area, and this is where it closed at. So again, as we're looking at this candle opened here, it pushed up in this area at the top of here, went all the way down here, and basically finally closed here. And so as you see these candles, right now I have them on the 15-minute interval. That's what you can see up here on my TradingView account. So each of these candles, right, represents 15 minutes. 15 minutes right here, plus this 15 minutes right here is 30 minutes in total. And then right here is 45. So these four right here would make an hour of time. And then plus this would be an hour and 15 minutes. But as we go to current time, let's click out right here. We can see that this candle is currently forming. This candle has 5 minutes until it basically forms another candle. So basically what happened right here, we can see right here, price pushed up, This was the open, this was the close. After this, it ended up opening here. Price went up, then went down. So it's starting to go downhill. It's going downhill again, slowly going downhill again, downhill, downhill. And finally, price again opened here, closed here. So for the green candle, right, you see this is completely the same. Price opened here, pushed down a little bit, and finally it's going up. So now it looks like price is trying to go up. And basically, when we're going to be trading, we're pretty much going to be trying to wager that either price is going to go up or price is going to go down. That's in the form of a buy or a sell. So if we're going to buy and we want to make money, basically what we have to do is say, okay, well, price is at this area. Let's say in this area right here, we see that price is really not trying to go any lower than maybe this area. You can see this little arrow right here. Price is fighting it, coming up, coming back down, fighting it, fighting it, fighting it, going up, coming back down. So on this blue line, basically, we can wager that price is going to go up from this area right here. This is one of our high probability guesses. So we wanted to say that price is going to go up. What we do would be to enter a trade in this area. So that would be something like what this tool right here, what I got going on, is called a long tool. If you see, I hover over it, long position. So we want to place our trade exactly on this line. Now we got a trade placed on this line. We basically just wanted to ride up, target a 1-to-3 risk to reward ratio. As we see, we come back here at the bottom of this area. I mean, if we were to draw another line from here to here, we're basically allowing ourselves some breathing room because we've seen that price started to, reverse from this previous area to come up, and from there basically came down, and then finally it looks like it's starting to pump up. So if we were to potentially take this trade, again, we would target a 1-to-3 risk to reward ratio. We would have won this trade right here. Same thing like this right here. We're seeing price, okay, finally came through, came back down. Price is pumping down, pumping down, pumping down, pumping down. If we were to draw another line from this area, from here, top of here to here, okay, we see that price is pretty much falling within direct correlation to the straight line. Price tried to push above it. We see that, again, this is a green candle, so price opened here. It went down here for a little bit, it sold off, and then it pushed up like it was gonna go up a lot. Then finally it closed in this area. So that lets us know that it's a lot of selling pressure coming in right here. Again, we had these 3 big red candles, red candle, red candle, red candle. From there, we have it where for this trade right here, okay, maybe we are looking at a sale coming up, a sale position. So we had this candle right here. Again, this is 15 minutes. 15 minutes, price came, it opened here, it went up, went down, and finally closed right here. Okay, so price opened here, price went up, went down, and then came back and closed again. So as we're looking at this again, we're trying to do a line of best fit. And just like I said, just run this horizontally over. From this area, pretty much, we have seen that, okay, in this area, we have it where price is going above this line just for a bit before it's reversing out. So the best thing that we could have did in this zone right here, again on this straight line, is come back to the top. Is this a straight line? No. That's better. Okay. So best thing what we could have did at this zone, instead of the long tool, now we're doing the short. So if you ever hear something in the trading realm called a short, that just means a sale. That's just a terminology for it. So if you did a short in this area, I mean, you don't want the stop loss to be this wide, maybe come a little bit above this previous selling pressure area. But what we could have did in this area was do the same thing we did here. We entered the trade right here. We again would want it to be a 1-to-3 risk to reward ratio. So if price pretty much comes and hits that, pretty much we'll be done made some money. And we'll talk about, like I said, how much we'll make with these trades in a bit. So what you should be looking at with longs are basically buys, shorts are sales. Just remember, short starts with an S, sale starts with an S. Long just means buy. It's just, I guess, I don't know, it's just not a correlation. B with B or something like that, a LB. With that, we're going to be focused on, again, either a buy or a sell in this area. So basically what we have to do is we have to partner with a broker, because me and you, we can't just pull up to the market and trade, you know, by our lonesome. We have to be with a broker. And a broker is a person who basically ends up, can y'all see Osprey right now on the screen?
Yes.
Okay. Yep. So basically we have to be partnered with a broker to pretty much be able to enter our trades. A broker is basically someone, they're like, not like really a bank, but they're an organization pretty much who allows, you know, people to basically give them money, and in turn, they're allow you to be able to trade. So the broker that I like to use is Osprey.com, Osprey Forex. Basically with them, what you do, you can either start out with a funded account, or you can start out with a personal account. Like, I recommend doing both, just due to the fact of the funded account and the personal account, they basically abide by different rules. I guess I can go over the personal account first. So how the personal account works is you basically have to trade your own funds. So if I want to have, let's say, $10,000 of trading capital that I want to trade with, I basically have to send Osprey my money via Bitcoin, or, well, yeah, they got it where you can pay with credit card, but I never paid with a credit card with them. But yeah, you can send them money via Bitcoin. And after that, pretty much like you created your account, like when you did the little sign up, from there, you're basically able to get your account. And then from there, you're able to trade all of this, what you see right now. So this is the Forex majors. So these are like the pairs, pretty much like the pairs everybody like in the world is pretty much trading. Like, this is what majority of people are trading. They're trading the Australian dollar versus the US dollar, the euro versus the US dollar, the Great British Pound. So if you ever hear somebody call this like GBP, that's what they call it, versus the US dollar. Excuse me. The New Zealand dollar versus the US dollar. Jesus. Then the US dollar versus the Canadian dollar. So this is US CAD. Then the US dollar versus the US franc, which is also called the CHF. And then the US dollar versus the Japanese yen, which is USD JPY. So what people in the community do, instead of, you know, saying AUD USD, they just say AU. So they take the first letter from, each basically major currency. And then they take the first letter for the second currency, pretty much, which is comparing the two. So if I go back to my charts, right, let me try to find AU real quick. AU, so this is a chart for AU, right? This is, as you see right here, this is Australian US dollar. When I go back to Osprey, pretty much this is what you see right here. So this is what's going on in current time. Looks almost same, like a little bit like Nas. Let me go back real quick. Yeah, damn near looks the same. This chart. Excuse me. So this is what you're seeing in full time pretty much is you're having the strength of the Australian dollar be compared to the strength of the US dollar. And how we can make basically money off of this is basically if we know, let's say Joe Biden is forgiving student loans or something like that for everybody in the nation. Now, if he does that, pretty much, wiping away that $2 trillion deficit, the government is basically gonna have to print money because they technically wiped out that money. So as they print money, what's gonna happen is the power of the dollar is gonna get weaker. And as that ends up happening, if we're trading the Australian dollar, basically what we would be saying is, okay, well, against the Australian dollar, it should be getting stronger. As you see right now, it should be getting stronger versus the US dollar. So I don't know what happened in this area right here. I haven't paid attention to the news today. As far as like what's, getting this spike going crazy right there. But yeah, something ended up happening that caused the Australian dollar pretty much to overtake the US dollar pretty much in strength, dominance. And as you see, like just going backward in the past, like, the Australian dollar was pretty much weaker than the US dollar for a bit. We go to the 1 hour, chart, right? We see that, again, this is the strength of the Australian dollar against the US dollar. So the US pretty much was gaining momentum going down. And this was pretty much tied to the interest rates last week. The earning reports pretty much said that the US dollar was going to get stronger just because interest rates wasn't as bad as the Fed thought they were going to be. So they were pretty good last week. And that's also why you see, the price of gas and everything else, starting to come back down a bit too. So as we see that pretty much going down, I mean, pretty much it went sideways for a bit. Then the Australian dollar started to gain some strength. Then after that, starting to lose some. And then finally, we're getting this, up pump. Like we see right now, the Australian dollar is pretty much gaining leverage compared to the US dollar. Still going up, still been on a little increase. And as you see, like I said, there's one big candle. And again, we're on the hour increment now, where we see within the last, 1, 2, 3, 4, 5, 6, 7, basically 8 hours. Within the last 8 hours, just shot up a lot. So if we were trading this, right, and we do a little arrows. So we were trading this in this area. So we're trading this in this area. If we pretty much would have did a long here, let's say we didn't even risk that much. So we did to the bottom of that wick down there. Well, the bottom of that body, I meant, not wick. And let's say we didn't have a take profit on this and we just pretty much let this run. So if this was here to this area, price basically would have went, let's say 80 pips. And basically what pips mean, this little measurement tool pretty much says this is 77.9. And again, we're just, excuse me, we're just going to round this to 80. in this area, this will be 80. What we have to do now is multiply this by 10. So 80 times 10 would be 800. And now pretty much this is where the wagering part gets when we're initiating our trades. This would be 80 times 10, which would be 800. And let's say I wanted to wager $1 pretty much per pip. In this instance, if I wagered $1 per pip, I mean, this would have been $800 pretty much we would have made in a little under, let me see, 1, 2, 3, 4, basically 4 hours. So you would have made $800 in 4 hours. And like I said, that's with having a small account. If you had a $100,000 account, let's say you wanted to do $8 per pip. So what we would have to do in this time, we would have to multiply again this 800 by 8, because again, that's what we're wagering for price going up or down. That would be 8 times 8, which would be $6,400 pretty much you would have made in a course of, 4 hours, the same amount of time. So the pips, that's pretty much going to stay the same. But as you trade, as you get more money in your account, or as you acquire more capital, you're going to be able to make more money. So you start off with a small amount, and over time, you're pretty much able to grow that amount and, keep increasing pretty much how much, you're making per bet. But that's only with the personal account. That's why I really like the personal account versus the funded account, because the funded account technically has its own rules due to the fact of it's only so much that you can lose with a funded account per day. And you can't just come out, guns a-blazing with your first trade, loading up a big lot size, hoping that, this trade is going to go your way. Because even in this instance, let's say you were getting froggy. Let's say instead of doing 8, let's say you got a $100,000 account. I mean, 8, that's a small amount for a $100,000 account. Let's say instead of doing 8, let's say you want to do 30. So now what you got to do is you got to multiply 30 by the same 800. So if you multiply that 30 by that 8, that's $24,000 you done made in 4 hours. Yeah, it's a lot of money, but if you lose this trade, let's say what is this? Let's say this is 9.6. This is 9.6, right? 9.6. Let's just round it to 10. If you lose this, so now you have to multiply that 10 by 10, which that would be 100 pips. So this would be 100 pips. If you multiply that by that 30, again, the same thing with what you bet on price to go up. So 30 times 10, right? That's $3,000 pretty much that you lost. Now, everybody who has had experience with a funded account, you guys know that with majority of funded accounts out here, the maximum that you can lose per day from your account is 5% of your balance. And usually it is whatever your funded account balance is. So if that's $100,000, that means you would basically multiply that 100,000, by 0.05. That basically give you $5,000 that you can lose for the day. And after you have lost that amount, your funded account is done, finished, finito, and you have to complete this process all over. So if you lost this one trade right here, you're already negative $3,000 for the day. You only have $2,000 really that you can play with. And now by you basically, trying to get a big home run, within that first little initial play, you're down by a lot, and now you only have, $2,000 breathing room to, get your account back right. And with funded accounts, usually majority of them have where you can only lose 10%. I like Osprey because with them you can lose 12%. So if I have $100,000, I technically can lose, $12,000 in total. So if my account comes back to $89,000, I'm okay. If it comes back to $88,000, no matter even if I'd have made $100,000 for the company, and I just had 3 bad days in a row, right, where I lost 4%, 4%, 4%. I mean, not 4%. Where I lost no, that is right. Where I lost 4%, 4%, 4%. 3 days in a row. That's $4,000. In total, that's 12,000. I have just pretty much, lost my funded account, and when you lose that funded account, it's no fun. But usually, when that happens, either we were, trying to get too greedy, $800 is nice, okay. $6,400 is even nicer. But something like I said, when we're trying to get, around that 24,000, like really with $100,000 account, I probably say something safe on the safe side is probably getting $12,000 a month. With that, right now, like with my funded, right, I trade with about $800,000 worth now. That's how much my funded is now. I got 2 accounts pretty much up to 300K, and I got 1 account pretty much up to 200. And then, like I said, I just got my personal account. But the thing is, like, now I wait on like more drawn out plays pretty much to, end up like getting, a bigger lot size. Like back in the day, like when I was feeling like a lot of the challenges, I was one of those people who was, stacking the deck. Like if I had, let's say one win right here, let's say maybe this win was $2,000. I'll say, okay, well, I made 2 right here. Let me try to make like 15. And so sometimes it will work. But the thing about that is like trying to catch lightning in the bottle twice, it just doesn't, play out that often. And once I start realizing, okay, well, instead of me trying to get, 24% in a day, let me just try to get 12%, in the month. And when I start doing that, it just came a lot easier as far as, just seeing, your account basically increase to that positive, that healthy mark that you were, trying to get from the jump. Again, like I said, you can get, lucky, and you just have to pay attention to the news pretty much to be in tune, with what's going on with the events around the world. But for the Forex pairs, like I said, these move a little bit more slower. Excuse me, compared to something like gold. Gold moves hella quick. As we see right here, I mean, this was one trade I was looking at. As we see right here, pretty much gold pretty much retraced back to this area. If I was to run a line from this line to here, boom, you see price was pretty much fighting on this line. So again, price looks something like that. I mean, this is a shit ton of the stop loss is a little too wide for my taste. But if I looked at this line pretty much and I seen, okay, price is pretty much getting on this line, what I then would do was be trying to find out, okay, a point of entry maybe where price pretty much, ends up being respected. So instead of maybe getting in here, maybe instead of here, maybe I got in here. And again, like I said, this 200 pips for gold, this is super wide. So now with my accounts, if I'm trading gold on my funded account, I trade with a 20. If I'm trading this with a 20, again, this is 250 pips. Let me do the math real quick. Let me see, 250 times 20. That's $5,000 pretty much that I would have lost. As we see, pretty much, price ended up. Oh, so let me explain this real quick. This tool, this tool, as you see, like this little line right here, this is where the trade pretty much opens up, and this red area pretty much right here is our stop loss. Your stop loss is pretty much a target of letting you know if price pretty much comes at the bottom, so at this bottom line right here, pretty much you'll be automatically knocked out of your trade. So as we see price pretty much push below this, and we would have lost this trade. Again, this would have been $5,000 pretty much lost for me. And that's what, like I said, that's what using a 20 standard lot. Now, if I would have used a 40, that's 8,000. And if I would have used a 50, I mean, if I'm feeling like real foggy, I'll use a 50. But usually if I'm using a 50, I try to, like I said, have my stop no larger. I mean, no larger than like 100. And like I said, this is just completely, this is too big for me. But if I turn this on, let's say like the 15 or something, I see that price pretty much was, getting reversed here. Let's say I drew an additional line from here to here. Boom, boom, boom. Let's say instead of waiting, I waited for the liquidity grab to happen. Let's say I got in there. Again, my stop is pretty much below this area. Again, I'm only going, so if I'm using a 50, I'm only going to use 100 pip stop. And if I would have used it right here, I mean, shit, this would have played out. So 100, this would have been 2,638 pips. Let's do the math real quick. So 2,638 times 50. If I would use a 50, I mean, that's 131 grand. Like, I'm not even gonna lie to you. Like, I don't even let my profits hit that high without me pulling something off the table. Some of the people who took the course before, they already know, like, I don't play that. But for me, like I said, using a 50, yeah, that, I don't know, it's very stressful, very stressful. Like the other day, I did like, it was a little over 18K, but that was using, like I said, I wasn't even using a 50 there, and it was like a 20. But like I said, I ended up with gold, ended up catching, a good runner. Pretty much like the rest was history after that. Like even with a 20 with this, I mean, you're still looking at 52,000. So like with me, like I'm pulling right here. I'm not even gonna lie to you, like something like this. Each time price pushes up, what I'm doing is, I can't do it with this tool, but I'm gonna show you real quick. Each time price pushes up, if this is the stop loss, I'm pulling my stop loss up, price pushing up, pushing up, pushing up. Especially with those big lot sizes. Like once you do this, basically the trade is going in your favor. Pretty much this has become a free trade. So even if price does come back, like in this area, and tap you out because it hit your stop loss, you made money. Even right here, right? Let's say you had the stop loss right here, price pushed up, pushed up, pushed up, finally came back. That's what you see right here, this wick, this little line right there. It came back and basically blasted through your stop loss. I mean, you still made money. How much money, you ask? Let's see. From there to there, that would have been 820 pips. So your 820 times your 20. I would have been 16,400 bucks. So that's why I said, like, I'll really be pulling like after this, like, yeah, trying to hold on, for, big amounts is cool and all, but in my textbook, a bird in the hand is worth two in the bush. Like, it'll just always be like that with me. So from there, you know, that's how, you know, we end up measuring these points in the market, these pips, that's what they're called, pips, when you're referring to Forex or trading with metals, it's this pip amount. And then you basically just, you know, measure, you know, how much money pretty much, you know, you want to make per trade. But that's all centered on how much your account size can handle. Now, again, the personal account, to me, it takes a long ass time to build up a personal account. If you don't have no capital, it takes a long ass time to build up a personal account. But let's say with this account, right? Let's say this small amount, let's say if I lost this trade with my personal account, let's say this is 5%. So I lost 5% right here. Let's say I lost 5% right here. I'm just cloning this. So let's say I lost 5% right here with this trade, as we see right here. Come on. So yeah, let's say I lost this trade right here, boom. Let's say I lost that trade. So let's say I lost 5% right here. I could turn around and on the funded account, since I lost 5% in a day, I have to start over. So now with me having to start over, I got to pretty much wait about anywhere from 45 to 60 days to get my account back in order. And again, I got to pay money and, you know, do the evaluation and all that other good stuff. But with my personal, I lost 5%. I lost 5% of my money in my account. It wasn't that big of a deal to me. It was just 5% of money lost. But then I can turn around and execute on this trade right here. Again, so what is this? 30 minutes? Yeah, so literally 45 minutes later, I enter this trade. And again, I lost 5% in this area, but I was able to gain 26 times 5%. That's what you see, this risk to reward ratio right here. Let me see how long this would have taken. So this would have taken 4 hours and 30 minutes, right? Again, I lost 5% right here, but then I gained so much back. Again, this is a 26 to 1 risk to reward ratio. And again, in this instance, I'm betting 5%. So what we have to do is basically multiply that 26.31 times 5. So basically we would have got 131.6% gain on the account from this one trade. Putting this in a money perspective, let's say if we were risking, what is that, $500 for this trade, 500, you know, times the 26, 500 times the 26, 0.31. Basically, this trade would have netted us $13,155. That's with risking, you know, $500. If you want to risk 1,000, I mean, you technically would have made, you know, $26,310. So that's why I think overall, personally, to me, the personal account is better than the funded account. It's just harder to get to where you can be trading with the funded account. And again, like when you're trading like your real money, like if you're losing, let's say you started out with $2,000 on your account, your personal trading account. Let's say you're losing, you know, $200. Like you might think of it like, okay, well, that's maybe 2 days of work, you know, for me, where, you know, I'm having to go clock in and, you know, work, you know, these 8-hour shifts. You kind of got to think about with trading, like, you know, you shouldn't be willing to risk anything that you're trading, anything that you're technically not okay with losing. So at the end of the day, like, if you don't set like a stop loss or anything like this, let's say you were betting on price to go down. let's say you're betting on price to go down. Let me move that. Let's say you're betting on price to go down. Let's say you didn't have any stop loss at all. Some people don't trade with stop losses. I mean, I kind of would advise against that if you're just starting off. So if you weren't trading with a stop loss at all, and you was like, okay, let's bring it to where some bad habits can happen. Let's say you were betting on price to go down, right? You didn't have a stop loss. Maybe you did have a stop loss at first. Okay. Let's say you had a stop loss right here. Let's say your stop loss was small. Let's say when you entered this trade right here, you got stopped out. Let's say when you entered this trade right here, again, you got stopped out. Let's say when you entered this trade right here, you got stopped out. What you see right here. So now you say, okay, you know what? I lost this trade. Let's say I lost 2%, 2%, 2%. I'm not going to trade with a stop loss. Because you say, okay, at the end of the day, it still ended up going within my favor. I got stopped out, and oh man, like I could have had all this money right here. This price opened here. This is where I got in at, pushed up, took my money. Price opened here, as we see, pushed up, got my money. Same thing happened here. I got in here, price pushed up, went all the way down here. I left all this money on the table. So you start, okay, you start playing dangerous. You're like, okay, I'm not gonna put a stop loss. Price went down here, okay, you're good. Versus where you would have got stopped out at. Okay. Same thing here. Let's say you got in here. You were in negative, you were in drawdown, that's what they call it. In drawdown, that's when price goes against where you're expecting it to do. In this case, you're expecting price to go down, but price pushed up. And it finally went down. Okay, you're still good. Now you're like, okay, I got this win right here. I got a win right there. I got a win right here, eventually. Okay, let me try to get this win right here. So you go for the same thing. Okay. You feeling good about yourself. Okay. I was in drawdown for a lot right here, where you normally would have got stopped out here. But this is where bad habits happen. And they end up coming back in the bite you in the ass. Let me just move this out the way. Let me clone this again. So you expect history to repeat itself. You get in on this trade right here. You're expecting price pretty much to come down. And as we see what happens in this area, it just never does. So if you were risking, let's say 2% right here with a funded account, you have just blown your account. If you were trading a personal account, you have just damn near blown your account, depending on what lot size you're using. That's why, it's always essential, even though, like I said, when you're beginning, if we would have traded this account right here, I mean, we would have only, let's say this was 3%, we only lost 3%, versus, what is that, 21%. So that's why, we have to we have to be cautious when trading because bad habits when trading can only get us so far because one of these times like this, you're going to get wrecked. And when you do get wrecked, you're going to think trading is a scam. You're going to think that the market's against you. But in actuality, like this all could have been, avoided if you had just stuck to the rules and, just end up using a stop loss. Trading is one of the only professions where you technically don't need to go to school to become a trader. Think about it, lawyer, 8 years of schooling, doctor, 8 to 12 years of schooling, teacher, 4 years of schooling, trader, pretty much anybody can do this. Like, it's no time for certification, nothing like that. If you want to get on the charts, you got money as long as you're 18, you can start trading. But the thing is, like, you can have beginner's luck. You can make $50,000, but then, you can end up losing it too quick. You can make $100,000, you can lose it quick. 2 years ago, it was like right at the beginning of the pandemic, a guy took like $15,000 and he made like $1.3 million. And then he ended up proceeding to lose that money. He was like negative $360-something thousand. And the guy ended up committing suicide because he thought he had to pay that money back, that his account was negative. But he didn't know that pretty much with trading. And when your account hits negative, like you don't owe like the company anything like that. It's just telling you like your account is like cooked, it's done. Same thing with the funded account. Let's say you got a $100,000 account. Let's say with the funded account, let's say you were anticipating on this, like I said, to go down. Let's say you wagered, what was it? Let's say you wagered $10,000 for this trade. Let's say you lost $10,000, so now your account's back to 90,000 from 100,000. With that, that the daily drawdown rule pretty much is 5%. By being 5%, you have already violated the rules for the funded account. From there, you're still negative $10,000 pretty much on the account. You technically don't owe the company anything like that. You pretty much just failed the challenge. Excuse me. So that's why, like, most people, don't understand too. Like, they really don't think about it as like when you fail with the funded account, pretty much, the company is pretty much only going to have so much that they're going to lose with you. Again, if you pass the funded account, they're pretty much going to give you a real account that has $100,000. From that account, you're basically going to be able to trade that account. As you trade that account, you're going to basically have it where by you trading it, you're going to get paid out from them pretty much every week if you choose it. From there, it'll be a 70-30 split. So if you make $10,000, pretty much you'll keep 7, because you keep 70% and they'll keep 30%. So it's always going to be like that with the funded account. So if you make them $1 million, again, you're only going to get $700,000 and they're going to keep $300,000. That's why I say, like, the personal really is the end goal if you can build your personal up, because all it takes is one violation, one bad trade of being, too much money. And from there, pretty much, you end up losing your account and all that money pretty much that you had earned. Let's say in the week, let's say it's a Monday, right? Let's say on Monday, you used a 50 lot. Again, let's say you made $60,000 on Monday. Let's say on Tuesday, you came back around, let's say you made another $20,000. So you're up to $80,000 for the week.
And let's say on Wednesday, you came in and you lost $10,000. Again, you have just exceeded the 5% daily drawdown rule of, the maximum that you can lose is $5,000. Even though you made the company $80,000 the previous 2 days, they're going to keep all that money. And pretty much like you're not going to get any payout from that. So that's what you kind of need to also be wary about, when it comes to the funded accounts is, okay, I got this funded account. Well, what happens when one of these instances happens? Sometimes some funded accounts will say, okay, well, we'll give you 5% of what you made for the week for the payout. Some don't give you anything. But yeah, majority of them don't give you anything. It's just like, thank you for doing business with us. You being our trader, you made us some money, but they're only going to have a set amount of money that they're going to be willing to lose, again, because they're fronting the $100,000. It's like you going to a complete stranger on the street and you're saying, hey, here's $10,000. I want you to take all my money and, just lose it. Go spend it how you want to spend it. And you want to get that money back. You might, if you give some money to somebody, you might have stipulations on it. Say, hey, I'm giving you 10,000, but I want my money back at X date, and I want interest on this. Can you pay this? Yes or no? And you want to have legal documentation too for that. But yeah, the company, when it comes to you losing the money, that's why I say, like, after you lose that 5%, even though your account, let's say this is 5% and it shot all the way up to 10, and you didn't automatically close this trade, when you're doing the funded account, they're automatically going to close it. As soon as you hit 5%, close. Like it's already in the system. It's automated. Like the instance you lose, like you could be good. You could be $4,999.99. You could be right on the dot, right? With your account, and you be good. Like if you were able and blessed to be able to cut it off before that 5%, like that 5,000 hit, you're good. You're saved by a penny. But the instance that thing hit 5,000, shut it down, buy another account, come back again, try tomorrow. So that's what you're gonna see pretty much on here with some of the funded accounts. That's what you see right here. For some of the people who were in the class earlier, that's why I was telling you I was doing the beta testing for the 2.0 pretty much funded accounts. Basically with the old ones, basically what we had to do was so this is how it works. This is the funded account. So the program consists of 3 steps. So you got to basically first purchase a challenge entry. Then you got to basically prove yourself. This is why you're pretty much verifying your strategy. And then number 3 is get funded. So in the demo stage, pretty much, you have to get 10% of profit on whatever account pretty much you open for 30 days. The minimum trading days pretty much that you can have is 10 days. So out of the month, you have to trade at least 10 days. The maximum overall loss that you can have on the account is 12%. The max daily loss, again, is 5%. So this is why I was talking about $100,000, just because it's a lot easier when you think about it. So 10% of 100, that's 10. So this would be $10,000 that you would need to make in profit. The minimum trading days would be 10. And really with the funded accounts, you guys can kind of take this slow, because I was rushing it at first, but then, I found out that, for a majority of the funded account, they really want to see some consistency. They don't want to see you make 10% in one day and then you still have 9 days left. And then you do little small trades, small trades, small trades, small trades. No, they want to see you to basically be consistent, right? Because as they see right here, it says all acceptance criteria specified in the terms and conditions must be met.
before access to the funded account will be granted. So that's literally one, if you read his terms and conditions later on, that's one of the criteria. Like you can't make over 30%, in one day for this 10% challenge. After you get your funded account, like it's real, their money that you're trading, I mean, you can do, like I said, you can risk the biscuit how much you want to, like I said, how much you're willing to risk to make, large amounts. But after that, is pretty much going to be on you. You're basically playing, Russian roulette, because again, you can only lose 5% for the day. But it's better for you to, if I got to, if I got to make $10,000, okay, I got 10 minimum trading days. Well, let me try to make, let's say $1,500 a day. And if I can do that at the end of the day for 10 trading days, that's 15 grand pretty much that I'd have made. Again, I am over my pretty much profit target. And I also want to make sure, that I don't have a 12% overall loss, or I don't want to have a maximum daily loss of 5%. So you got to do this stage first. So stage 1, and then after you get to stage 2, this is the verification stage. This is where you got to basically, well, now they have a change. So back in the day, you used to have to do 10% for stage 1. Then you had to do 10% for stage 2. Again, this stage requires 30 days. They also added 60 days now. So they added 30 more days than what it used to be. So now, instead of doing the 10%, you do 8%. And now, instead of doing the 30 days to get this 8%, now you have 60 days. So it's literally even easier for you to get funded now. Same thing with the max overall loss, 12%. Max daily loss is 5%. And after you complete the second stage, so again, let's say 30 days for this, again, if you do 10% in 30 days, you should easily be able to do 8%, in 30 days. Like, it is what it is. You shouldn't need 60 days really, but you don't have to rush it. Like I was getting to stage 2 and I'd be like, okay, well, this shit is like, easy. It wasn't even the 8%. It's like, okay, I did it one time. Let me go ahead and do it again. So by the time that you rush stage 2, like, I don't know, it's just like getting super cocky or, just arrogant. And, you just rushing in there, like doing like big lot sizes. Boom, I failed stage 2. Haste makes waste. But after you complete stage 1, and then you go and complete stage 2, basically they evaluate all your trades. So that's why all your trades need to be good. That's why I say, if this is going to be, you're targeting 10%, try to make about $1,500 daily. So at the end of stage 1 and stage 2, there's nothing wrong that they can say, why they can't fund you, your real account. So after stage 2 is completed, okay, they'll get you funded. So usually it takes about a week. That's what it took with me. It took about a week. And then just review your trades, and after that, pretty much they give you your login credentials. From that, you're eligible for the weekly payouts. And again, you have the same max overall loss, which is 12%. You have the same max daily loss, which is 5%. So the maximum that you can get is $200,000 now. Some of you might have known this, I don't know. But right here, you got where's that? Yeah, so the weekly payouts. And then they also have scaling now too. So if you can go 4 months, pretty much trading consistently, if you get over 10% pretty much every month for then, what they'll do is they'll double your account. So if you had started out with $100,000, but you were able to generate $10,000 pretty much in revenue per month for 4 months straight, what they do would be to double your account. So instead of that 100, now you're basically able to trade with $200,000 account, basically because like you're proven, and because they know, because this is a partnership, again, you're receiving 70% of the payouts. They're going to be receiving 30%. You got to kind of think of the broker and you like an artist, let's say Michael Jackson, you're the artist Michael Jackson, and they're Motown Records. Motown Records, you know, has the money to get the artist basically to be played on the radio. But at the end of the day, like the artist still needs talent, you know, to be passed off as likable amongst, you know, the consumers. And you know it as you see it now, like it's a lot of people trying to do, you know, music. But you know, it's only certain people, you know, who are on that Drake status, that Cardi B status, Nicki Minaj status, Bad Bunny status. Like, it's only certain people, you know, at the top of the game like that. And you got to think about it like with the brokers. Like, at the end of the day, they have all the gas in the world to get people, you know, trading with their accounts, but they need you, the artist, they need you to be basically the flame to, you know, ignite that thing and, you know, keep it going. So it works, you know, as a mutual partnership between you and the broker. That's why I said like the broker, the broker pretty much will never really try to mess you over. There's some that will try to mess you over, like some accounts basically make it easier than others. I'm not gonna say any names, but I talked with some people earlier where, you know, it's only 8% in the first stage, and then, you know, it's 5% for the second one. But then, well, fuck it, I'll just go ahead and say, well, my Forex funds basically had, like the other day, like last week, they had where they ended up basically messing with the ticker price for like 8 of the pairs pretty much that people were trading. Like it was for gold, it was a gold spike, it was a GBP USD spike. And basically when that happened, like a lot of people end up losing their challenges. And a lot of people who had their live accounts for the challenges ended up losing their challenges. Why that ended up happening is because a company that's just getting started like them, since they're not a bank, they're not a true broker. They're just pretty much a funded account organization. They have money, but they make their money pretty much off people, you know, buying, you know, their funded accounts, and they're basically preying on people, you know, to lose these accounts. Well, Osprey is different. I like Osprey because Osprey is actually a real broker. FTMO, they're not a real broker. You can't go and trade personal funds with FTMO. You can't go and trade personal funds with my Forex fund. You can't go and trade personal funds with Funded Trader. You can't go and trade your personal funds with who's another one? My Funded Trader. It's just like a bunch of these funded brokers. I mean, not funded brokers, these funded organizations, same thing, like top tier traders. They don't have, like I said, a real broker setup. Like you can't trade your personal funds with them. And anytime pretty much you're trading with these companies like that, when they're pretty much, I guess, casting their own data when it comes to these pairs, you have to be real wary, because like some stuff, like I said, that my Forex funds pulled, there was another company that did the same thing too. They call it a rug pull, where they ended up, you know, running off with a lot of people's money, you know, after like two years of being in the business. And they were like I think they were like the number one, they were the number one funded company. And after that, you know, they made a couple $100 million, got out of there. So, you know, you just kind of want to be, you know, wary of that, you know, just watch out. That's why I like I said, again, Osprey, they're really like one of the first brokers that I used. Like I used Hanko Trade, I used Osprey. I use IC Markets too. Like it was a couple ones that I used, but I really took a liking to Osprey. Commissions were low. Like, I really, like I said, didn't have any issue. Only issue that I had with them, since, you know, they're based on that UK time, is like sometimes, like if I send an email, let's say at 11 a.m., I won't get heard back until like the next day, or maybe like 2 days max. That's the only issue I have with them, and that's just different time zone. But yeah, it's this is the amount pretty much that we can be looking, you know, to pay for the funded accounts. You got $99, and so all these basically fees are refundable if you can pass the challenge. Which is $99 to basically trade with a $10,000 account, $220 to trade with a $25,000 account, $359 to trade with a $50,000 account, $600 to trade with a $100,000 account, and $1,000 basically to trade with a $200,000 account. And again, with my codes, I think this is like $74. This is like 200. I think this is like 289. This is like 469. I think this is like $774. Yeah, $774. But yeah, guys who were previously in the class, like they went up, or they went down on the funded accounts, but like my discounts, they don't work anymore, like because like they switched to like this new funded account, this 2.0. Yeah, they ended up like taking away them cheat codes. That's the only thing I hate about this shit. Like if you didn't get in, like get on before in that way, like it's a little bit expensive or more now, because you know we were back in the day able to get, you know, 100K for, you know, 350, you know, versus you know, 460 now. So it's like I said, a little bit more expensive now. But like I said, the only thing is, the new caveat is, you know, they got the 200K account. So, you know, there's that. But yeah, that's pretty much it. So this is the funded accounts. Again, I talked to some people personally, like, you know, what makes sense for you, you know, to end up trading. You know, if you don't have $1,000 pretty much to do a 200K account, I mean, maybe you want to start out at the 25,000, you know, go ahead and spend 200, you know, get this past stage 1, stage 2. Let's say we're trading something like this. Let's say we're catching, excuse me, let's say we're catching 400 pips a day with this. Let's say we go back to the chart. So we go back to the chart with gold. Boom, 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 boom. So we're trading gold right here. Oh yeah, that's small. Let's say we took a long in this area. Okay. Let's say we caught 600 pips from here to here with a $25,000 account. Really, for every 1,000, you basically can trade with a 1. So there's 25 of these. So you technically can trade with a 25. I wouldn't advise you to trade with a 25 because, again, like I said, if your stop loss, your stop loss is 100. So if your stop loss is 100 and you're trading with a 25, if you lose this trade, pretty much it's automatically going to be, you know, $2,500. You're going to lose like that quick. And as we know, 5%, 5% of 25,000, you know, that is, you know, $1,250. So by you losing that account with that, that's automatically, you know, it's done. You already lost your challenge like that, boom, quick. That's if you lost that. But let's say if you wanted to do a 5 instead, Okay. So again, if I lose 5, I got 100 pips. I can lose 5. 100 times 5, that's $500 lost. Again, you can lose $1,250 for the day for your maximum 5%. But the thing is, if you end up winning this trade, 5 times 600, it's $3,000 pretty much that you made for the day. That's something maybe you want to, get you a couple of wins of, using 5s or using 3s. Let's say even if you want to use a 3, that's still, $1,800 pretty much made for the day. If you lose that, that's only $300, lost. $300 again, you can lose $1,250. I mean, that's technically what a fourth of that amount for the day. So I mean, that's still good. Your account's still being healthy. Let's say out of the month, let's say you had where, I don't know, you caught, let me see, 1,800. Let's say you did 1,800 times 4 times out the month, 20 trading days. That's still $7,200 pretty much made on the month. After you do, your 70%, I mean, you're still coming away. You're still coming away with, $5,000 made for the month. And that's after the Osprey basically taking in 30%. And again, like I said, you're taking your 5,000. Now you got 5,000 in your account. Now, let's say you want to spend, okay, let's say you're tired of this, $25,000 account. Let's say, okay, I want to make more money. Let me now jump from the $25,000 account, to maybe the $100,000 account. So let me spend, I still got 5,000. I'm gonna spend 1,000. So now I got $4,000 still, and let me, continue to do this challenge. So now I still got my $25,000 account. So let's say you rinse and repeat again. Now you got $5,000 pretty much for the month. And let's say you pass this challenge right here. Now that you pass that challenge right here, where we're betting, let's say 5 right here. We know that 25 goes into 200,000, 8 times. So 5 times 8, that's 40. So now in the same instance, you do 40, right, times 600. It's 24,000 pretty much made with a trade like this. Again, the amount that we're looking basically to catch, I mean, that doesn't change. I mean, it might change with the market conditions based on, what's happening with the markets. Like if the market is like moving, let's say it's moving something like this, where it's not really that big. Of course, we might not be able to, catch 600 points, 600 pips. But in the case, like I said, if we were to catch it and we were using, like I said, our 40, we're using our 40, again, this is $24,000 made, with a 200K account. So again, after you do your 7%, boom, boom, that's, that's $1,600, almost $1,700 pretty much you're gonna take home. So that's how you have to be. You have to be strategic. You can't be too greedy. And just don't over leverage yourself. Again, if you lose this account, if you lose this trade right here, again, using a 40, let's say you got 100 pip stop loss, that's only, $4,000 pretty much that you're using. So again, a $200,000 account, if you can lose 5% for the day, that's $10,000 pretty much that you can lose. So, you're still good. You still have $6,000 pretty much to play with, to rinse and repeat. So that's pretty much just what you got to do. And yeah, it's not too difficult, but it's just, extra rules pretty much that you got to stick to. But the thing is, like I said, if you can build your personal account to the same level, you just won't be restricted to these rules, this 5%, drawdown, because you can easily, like I said, right here, you could have lost this trade right here and came back and, really killed it, even though, you were right on this first trade right here, it's just like, you know, sometimes it's just not forgiving, you know, with trading. Does anybody have any questions about anything? You guys can pretty much unmute yourselves if you want to talk or anything like that. Especially for the people, you know I'm taping this for some people who aren't here, but I'm gonna give them this recorded Zoom afterwards. I didn't even know Chris. Do you guys know if Chris tried to get back in this call? I didn't even know. I didn't even see she had dropped.
I don't have any questions for now.
You don't have any questions? Okay, okay. What about you, Leslie? You have any questions?
Oh, I have something to
Yes.
trading your own account. I know, yes, always trading your own account, your own money is better than those funded accounts.
Yeah.
But the problem is compounding, and the way you are saying losing. If you miss a trade, you stopped out 2-3 times, and your money is little, that means your money is gone.
Oh yeah. But with
if you have your strategies the way you came up with, that we can compound small accounts, just making sure that you're getting little money, but at least you compounding it, we're not losing. Even if it's for let's say you have 500, and for that day you make 50, you know.
Yeah,
me,
I have a formula. I have a formula.
Than having those other funded challenge with a lot of rules. Yeah.
Yeah, I have a funded account, and Baleen, like when you were in the well, when you were just talking just then, like I was hearing like a lot of background noise where I really couldn't hear what you were saying. Like it was kind of go in and out. But yeah, I have a formula. I have a formula when it comes to trading, you know, the personal account, because that's what I'm gonna be doing while you guys are doing that. Since my fundeds are already right, what I'm gonna try to do is for some of the people that I know, I'm going to be trading about I'm gonna say like $3,000, and I'm gonna try to flip that by the second month. I want to have that account sitting on like $60,000 from 3,000. So that's what I'm gonna be doing. So the signals pretty much that I'm gonna be giving out to you guys is I'm gonna be, like I said, taking that on my funded account. I mean, not my funded account, on my personal account, and I'm gonna be growing that personally, because that's what my goal is, to grow that to like 150. Just due to the fact of, I don't know if
That
people know this.
possible. If you get you get in the trade and you are right with the trade, that is easy, because you remember I told you about the stock thinker is no different with the forex.
Yep.
No different. It was I took that to let's say I had like 3 or 4,000. That the one which I compounded just in 3 weeks to get it to 44,000. Okay.
Yeah, I'm telling you, you can do it. It's very powerful. You just have to, you know, be on the right side of trading. But I got it now. I got it now. Like I said, using, like I said, some new techniques. It'll be even easier. Pretty much, you know, we probably won't be dropping below like the 15-minute. You know, trying to get in on some of these trades. We're gonna be taking supply and demand setups.
Yeah.
And pretty much from that, letting these play out. I mean, it might take, 3 hours to play out, but what I'm trying to catch now is like maximum pips. Like really, the Excel sheet, like I'm gonna read off to you right quick when I got this entered. So for my Excel sheet, right, with you starting off with $200, within 10 trading days, right, the $200 should be sitting at $1,000. If you go 10 more trading days, so that $1,000 should now be sitting at $6,389. And if you go 10 more trading days after that, so we're from the $6,000, $389. You go 10 more trading days, that should be up to $39,562. And that's only catching 400 pips pretty much daily. So yeah, I got, like I said, I got a whole trading matrix pretty much that I'm gonna share. Like I said, this is for the people who want to do the funded, route. Not the funded route, the personal route. I'll share that with them, so they pretty much can know, okay, this is what the lot size I should be trading. And that's trading a 0.0005% of your lot size. So again, if you're, starting out with a $200 account, again, you multiply that by 0.0005, right? That means you should only be trading a 0.1 lot size with gold. So again, if we catch, 400 pips for that day, so that's 400 times that 0.1. I mean, that's only $40 pretty much that you make the first day, right? But then, you just keep compounding that. Whatever amount you have in your account, you just multiply that by 0.0005. And then after that, you multiply that by, the 400, and then you add that to your account, and you just keep compounding like that. And, it's a gradual motion. It's not like, you try to eat the whole meal, in a 15-second sitting, a 5-course dinner. You gotta just take your time and enjoy it. And so that's what it's gonna be. It's gonna be a slow grind. And so that's what what I'm gonna be doing. Like I said, while you guys are doing the funded, is like I said, I'm gonna be growing that personal, because I'm doing it because there's another group that I'm in right now that has over about 8,000 members in it, and I'm doing that for proof of concept for them. And then, like I said, those guys, they got the money. Some of them know about funded, but then, like I said, some of them want to do like, the personal side. So I just want to show them, what, power that they have by, just trading personal funds. So from there, they're going to be able to see that. And like I said, I'm going to be able to, take that amount, flip it. And then, hopefully, like I said, by the end of September, beginning of October, I have that account, to about $60,000. And then from there, like, it's going to be from 60 to 100, like, super quick. And it'll probably be like maybe another week or something, because like 60 grand, again, it's the same formula, 60 grand times 0.005, right? That's a 30 lot size pretty much that we'll be using, times, the 400, that's $12,000 pretty much that you make, plus the 60. Now you're already up to 72,000. So, it's just going to keep getting bigger and bigger. So like within that week, like you should, hit like $100,000 after you hit 60. So that's how, quick it comes after, you done compounded your account, to a decent amount. Like it takes longer than the funded, but really, if you think about it, if you start off with like, if you start off with about $3,000, it's about the same time you would get your funded account. But if you start off with, let's say maybe instead of 3,000, let's say you want to start with 500. If you want to start off with 500, I look at this sales sheet again. Let me enter it real quick. But if you want to start with 500, at the end of, let's say, 40 trading days, I mean, you're pretty much looking at you know, anywhere from $33,000 to $47,000. Depending on, like I said, we can get wins, you know, every day, you know, in excess of, you know, $400 at least. I mean, 400 pips at least. So it doesn't take that long to get funded, you know, per se compared to the regular account. But I probably say like it'll probably be better to do the personal and the funded at the same time if possible. But I would definitely, like I said, you know, I'm gonna be pushing the personal. Like I kind of got away from like the personal at first. But like that's really, like I said, what got me, like I said, paid with crypto and all that. Like I was trading personal funds. So like the funded is cool and all, but you know, you also just gotta look out, you know, what could happen in the future. Maybe too many people are getting funded, or maybe they're saying, okay, well, you guys need to do a recertification, you know, of your funded accounts. It's like you know, you're driving with a driver's license, you know, and you know, every 10 years they're like, okay, come back in and get recertified, you know. So pretty much at the discretion of, you know, the organization, you know, whatever, you know, they deem for the rules, maybe they, you know, get to where they want to, you know, pool people money, you know, and just run off with it. So it's always good, you know, to have the personal fund. So, you know, nothing is, you know, interrupted in the grand scheme of things. So as you do make money, you know, with your funded accounts, you know, take some out, put it on the personal, and, you know, keep it going, keep it going, keep it going. So that would be my strategy, you know, to get the funded and then, you know, build the personal up. Or like I said, if you just want to forget the funded and just build the personal up, I mean, that's on you too. So it's, I mean, it's either of the three routes pretty much people want to take. Like I said, I'm just here advising everybody, but like I said, this is what I'll also be focusing on, will be the personal this time too. Just going forward, like I said, for the next 2 months. But Leslie, do you have any questions?
I'm sorry, I was away from my phone. No, not at the moment.
Okay.
Just kind of taking it all in. This is recorded though, right?
Yeah. I'm gonna send it to
Okay.
everybody pretty much after this. So like I said, everybody be able to review it. And after, like I said, well, people just hear back, I guess, whatever route people want to take, you know, I can start issuing out like the link pretty much to sign up with, and then pretty much everybody can just be on the same page and, you know, just go forward from there. Whether, like I said, you're going to be using the personal account solely, or maybe using the funded account first, or doing, like I said, a combination of both. Like I said,
that's actually what I was about to ask. Could you do both at once?
Yeah, you can do both at once, most definitely.
Okay, cool. Because I mean, they both seem like they have their perks, you know. So
yeah, so that's what, like last time, like when I started this class, like I really didn't go through both like that extensively, but yeah, I said like this time I definitely was gonna make sure I did that at the start, so like people know, like, you know, what the good and the bad is for both of them. So
right. Okay, understandable.
But yeah, like I said, I mean, it's not hard. Like literally, like when we get to like actually like bringing up like the trade program, like I promise you, it's not hard. Like I might can pull it up right now. Let me see if I can show you guys real quick. Can you guys see that?
I think mine is still on the chart, the last chart that it was.
Okay, wait. Let me see if I can show this. I'm trying to get there. All right, can you guys see that?
Yes.
So basically what this is showing right here is this is pretty much the terminal, pretty much that we'll be trading with. So this is the buy, well, this is the buy button, this is the sell button. And this right here is pretty much gold. That's what you're seeing. I mean, this is Tesla right now. So Tesla pretty much isn't moving right now. So how we would basically end up
placing this trade is, let's say let's say Tesla was like at this area right here. Let's say we were betting on price to go up. We would just click buy, and from there, basically, it would place us in a buy, and pretty much our money pretty much would be at this area. So you see on this account, this is $1,000 right here. Again, this is our account right here. So this is one of my little small personal accounts I've been grinding up. From here, price end up going up. Let's say you might would have made, let's say $3,000 in this move if you had 10, Tesla contracts. Can I see it? Let me see. Well, it won't let me do a sell limit. Fuck it. But yeah, from here, let me see if I can jump on something that is moving. Let's see. Let's see something like this. Okay, so this is still moving. All right, so I'm gonna do a sell limit right here. Let me do a 1 on Nas. So if I do a sell limit right here, only thing is basically I'm assuming that price is pretty much going to go down. This is not a live trade right now. So I'm gonna do my stop loss, right? So this is what you're looking at. I'm doing my stop loss right here. This is why I like to use MT5 over MT4. So this is my stop loss right here, this line. So this is where I'm doing my limit if price comes back up to here. So if I lose this trade, pretty much I'm gonna lose $72, right? But if I win this trade, let me take this a little lower than here. So if I win this trade, right, I'll make $589. Oh no, okay. How about I say okay? Yeah, this is gold right here. I thought this was Nas. I was like, that's supposed to be way more than that. Okay. Yeah, so this is Nas. So again, if I click sell or buy, pretty much like it's going to instantly, place me in this trade. But I don't want to do that right now. Because like I said, this is out my trading hours where I usually like to trade in. But basically, once we, like I said, I have everybody accounts right, like pretty much this is what we, be trading with. And again, this is MetaTrader 5. So I'm gonna just cancel this right here, delete it. Let me go to Nas.
I was about to ask, do we need to download that one, the MetaTrader 5?
Yeah. We'll eventually get to this.
Mm-hmm.
Like you're about to see right here, like watch this. I'm gonna do a buy limit. Let's say we had gotten this buy down here, and this is doing a 1. Take profit is up here. And I'm also going to do my stop loss down here below. Okay, let me modify that. Damn. So boom. Oh no, I didn't want to do that. All right. So if I lost this trade right here, again, I'm using a 1 standard lot. This is a fucking lot with Nas. It's very big. Like even though this is a 1, this is super huge when trading with Osprey. So if I were to lose this, this is 1,772 points. So again, each point basically costs $1. But let's say I were to win this trade, right? Let's say this trade ran all the way up to here. Like this trade, you're looking at making, $38,350. But in order to safely place this trade, you definitely want more than $1,000 in your account. I mean, you might can get away with it if you're. You must have to get like I said, a damn near perfect sniper entry at the bottom of this wick right here, and just knew prayed that price was gonna go up from here, from this area, from there to there, and maybe let's say you want to only lose $600. It's like that's a good ass risk to reward ratio. Risking, $545, to make, $38,350. So that's in maybe 10 hours time, maybe not even that. What is this? 15 minutes? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12,
So this is 15. So from 15 to 21. Yeah, so that's like 7 hours. Yeah, so yeah. You see how, like I said, how that's why I like to trade NAS is just due to the fact that it's a lot more volatile. And you know, for this, like when you really catch a lot of pips, like a lot of points. So NAS is different from gold and the other stuff what we're looking at, because this is measured in points. That's why you see like this points like underneath the bottom of the box right there. How we calculate this is completely different than anything else when it comes to trading indices, and NAS is one of those indices. And we also have US 30, and there's also like the Euro 62. They're like indices basically that we trade that, like I said, a lot more volatile, and they basically carry more weight than everything else pretty much that we'll be trading. So they're super volatile, and if you're, right, you're gonna make a lot of money with these. But like I said, they're super dangerous. Like I said, you can lose same way you can make a lot of money, you can lose a lot of money too. Gold, I like to trade XAU. That's gold. It's the pair that we was just on before this one. You can make a lot of money with that too, but it's just not as volatile as NAS and US 30 is. But like I said, that's what we'll basically mostly be trading. Will be gold, GBP USD, USD JPY, GBP JPY, NAS 100. This is what we're talking about right now, and maybe like EuroCAD or something like that. But yeah, you're gonna be able to make your money. But like I said, we just have to be consistent. Show up every day. Know that just because we lost this day doesn't mean tomorrow we're gonna lose too. Or if we lose 3 days in a row, long as we keep our losses to a small amount, we won't be that affected. When we start winning, because like I said, you can only lose so much. It's literally about 50% chance. You just want to, like I said, keep when you lose your losses very small, and let your winners end up going for a long time. So in this case, like I said, that little buy down here, like if you would have held all the way up to here, would have been 38,000. Maybe if you cut it here, let's say you would have been looking at maybe 19,000 or something like that. That's why we really have to be looking at everything. Like today, how much was it? I think it was I think I only did like 720 today, but it was, like I said, it was a little light day. But yeah, it's like once you get your funded account right, or once you get your personal account right, like you'll be able to run it up. And like I said, just keep rinsing and repeating, rinsing and repeating, rinsing and repeating. Like knowing if you get stopped out, or you end up, like I said, losing a trade, hey, it's no big issue. Like the market's not against you. I mean, the trade just didn't go your way. Forget about it. Come back the next day, and try to trade. That's really it. And if nothing, pretty much, if it's looking like just if it's looking like this where it's not really moving, let's say we forget about this here, but let's say it's just moving here to here, and let's say you're only making like $300 instead of maybe your usual $1,000 or $2,000, don't get frustrated. Sometimes the market just goes sideways instead of going up or down. So that is what it is. That's one of the formations of the market. It either goes up, it either goes down, or it goes sideways. So when it goes sideways, it's not really gonna make that much money, but when it goes up or down, you're gonna be able to make a lot of money. Just stay patient. But yeah, if nobody else, I guess, has any other questions, I guess we can end it there. And soon as this link is downloaded, I guess, for Zoom, I'll be forwarding this to everybody. So you guys can review it on your own time. And if you do have any questions, just hit me in the inbox, and I'll try to clarify, some of that what you have, questions with.
and make it clear.
No question for me.
Okay, cool. Well, in that case, guys, thank you for attending the first day of class, and like I said, hopefully, we do some great things, coming up within this next month. I really want to hit, like I said, August, running full force, and even if we, let's say, can't do it like the first beginning of August, like at least that first week, I want us, like I said, to pretty much be on the same page, and from there, able to just go forward, and what we're trying to do, because like I say, everybody's here to make money, number one. I know I am. Everybody's here to make money and, make a better life for yourself, your family, your loved ones around you. And, this trading is going to be stressful. It's going to be super stressful. I'm going to tell you that right now. But, you're going to have to keep getting out of bed, to look at the market, look at the charts. And from there, pretty much just be ready to push the button, because if you're ready to push the button, hey, you're going to be ready to make that money. So you guys have a great night. And like I said, I'll be seeing you guys tomorrow. Sounds good. Most likely same time. But I'll send it in the group chat. And like I said, if you can't make it, it'll be recorded again. So like I said, you can, digest it on your own time.
All right.
But all right, guys. Y'all have a
Okay,
blessed
good
one.
night.
Good night.
All
Good
right,
night.
have a good night.